Hello, everyone.
Ladies and gentlemen, this is Greg from Silver Liberties, and I just remembered to hit record, so he's going to have to do it all over again.
That's all good. What's up, gentlemen? How you guys doing?
Good,
Good.
good,
Good to
good.
see you.
Thanks for being with us.
Yeah. Thanks for having me. What do you guys
Yeah,
want to discuss today?
yep. Well, Greg was just explaining why you should become a Patreon member of Silver Liberties because I'm a Patreon member. I was just commenting him that I liked having a community of like-minded people that will help us improve each other because
Yeah.
I'm not perfect. I'm not a perfect trader and I need to work on certain things. And by talking it to people who are in the same thing helps. Plus,
Yeah, no,
Greg has
totally.
been
Yeah.
doing this a long time. He has even though he's younger than me, he has better experience than me in these things.
Yep. A lot of
Yeah,
us.
no, I do think I'm like the worst salesman ever. I think it's a little self-serving talking about myself, but what you're saying is, I have 15 years of trading experience. I'm not perfect either. I learned from you guys. One of the reasons you should come over and jump into our Patreon, it's $20. I'm giving away about 5 hours worth of seminars. I think that stuff's literally worth, $500 to $1,000 at least. We called the Monday a huge down move in the markets, picked up 160% on my VIX trade, which I handed out to everybody. And I put out a video showing people the cycles I used for that. And all of that's for $20. And, if you came over, tried it out, and you didn't like it, send me an email and just tell me you didn't learn anything, and I will give you your $20 back. So I think the risk is super low. And then you get to, anytime you learn something in the stock market, you get a single indicator. You can make hundreds, thousands of dollars off of that indicator. And it's just education, and it's only $20. So the risk is exceptionally low.
Yeah, and he also includes in the as he creates these programs, it's him and his brother Tim. They put them up for the Patreons to review at their leisure. So they have an options trading program, a crypto trading program, a markets history program, right?
Yeah,
So
yeah, it's a lot of a lot of the seminars. It's really, you're just paying for my 15 years of trading experience. And I'm just a guy. I'm a 41-year-old dad. I don't know if you want to go into the history of it, but I've been studying markets obsessively for 15 years, only just because I enjoy it. I have a passion for it. And I don't know, maybe this sounds a little bad, but there was a point in my life where I stopped kind of following sports, and it's kind of in my, I don't know, in late 20s, early 30s. I just noticed it didn't have as much of a purpose, or I didn't enjoy it as much as I do talking finance. And I just love trying to figure out where things are going, and you can make money if you're right. So it's kind of fun.
yeah, unless you're a gambler, what does sports offer you
I
really?
was going to say watching
Yeah.
sports.
What does it really offer? It's really, I could make an argument that the entertainment industry, including sports, is a major reason why our country is in the bad shape it's in today. Okay.
Yeah, it's kind of interesting you're saying that. So I met up with a buddy yesterday I hadn't seen in a while. He does really well for himself financially. He's also he's a little bit like me. He trades on the side. It does really well for himself. And we were talking about exactly that, how he's checked out of sports, and we were just talking about how the ratings have completely taken a dive, as they're trying to force feed all these narratives to us. And most people go to sports to zone out, not be inundated with all the stuff they're trying to zone out from. And viewership is in the toilet in a lot of the major sports, NBA specifically.
Yeah, good. I mean, eventually people are going to have to realize they have to vote with their wallets. That's the only way to affect change of any kind, and including our own country with our government. So I opened up. So you mentioned the volatility trade. So there's a lot of people now who are saying that the 5% dip or whatever it was met the requirement of the dip, and now we're going to scream higher. What do you have to say to that?
Yeah, this is where it's always tough, right? So I am a technical trader, so I look at charts, and in our Patreon group there, I was talking about, and I'm positioned myself for low markets to go a little bit lower, and I'm not talking about a crash or anything, but we did a lot of technical damage on Monday. And it's interesting to what's really fascinating right now is markets are not that far from all-time new highs. But if you look at sentiment indicators, people are already fearful, and it's very weird. I mean, the markets come down a couple percentage points and everyone starts to freak out. I think a lot of people have a feeling or understanding that something is wrong. We keep marching higher. And I think more and more people are waking up to the fact that it's really just a bunch of money printing. And then the Federal Reserve right now is constantly talking about tapering. And I believe it was Norway first country to raise rates in this environment. So it's just interesting. That doesn't get much headline attention, right? So I'm positioned for markets to go a little bit lower. I think we could see, a 8 to 15% correction max. Then I think we'll resume the kind of the normal stuff where the Federal Reserve will come out, stop talking about tapering, and just continue to print money. And the one thing with tapering I find super interesting is I think people think it's this, that they're going to stop printing. It's just printing less. Mm-hmm. If you guys had $100,000 on a credit card and you just keep, buying stuff every month, and you're like, hey, this month I'm going to taper. I'm only going to spend half of what I normally do above my income level. That's still bad. You're still taking on debt. You're still printing money. I don't know. It's a fascinating environment that we're in right now. So I'm positioned for markets to go a little bit lower, at least in the short run. And I'm actually kind of watching for like a euphoric blow off top, which I would not be shocked to see. And that sentiment indicator going lower right now, as we're barely pulling back, makes me wonder if we're going to see that. Like one more spike higher to all-time new highs. But it could be intense. I mean, we'll have to see it. So, Dave, you've been asking me for a little bit too, is Bitcoin going to go to 30s? Bitcoin going to go to, to all-time new highs? My question back to you is, do you think that the Federal Reserve is going to stop printing money? And this is my real issue with markets in today's world, is that's not a free market. That's not a capitalistic market. Nope. It's a bunch of people sitting around wondering what a couple dudes in suits are going to do and say, and are they going to make money cheap or not? And we're just guessing, and they already know the answer.
Well, no, we already know that they cannot stop printing money because it's literally a heroin addict.
Yeah, I mean, here's the thing: is they can. So, and what happens though if they do, to your point, is if you're an addict and you don't get your fix, well, you have major problems. You have major distortions in your body. It shuts down. Sometimes you can die, and that's the environment that we're in. It's not very happy conversation. The Fed is in a box, and if they don't print, things will collapse. But if they keep printing, I think that will ultimately still collapse things. And what's interesting is they keep talking about tapering. I'm sure you guys were following a bunch of Federal Reserve guys. I don't even know why they're doing it openly, but they sold a bunch of stocks. How are they allowed to even own stocks? Are you serious? So if they were going to stop tapering, these guys have now sold their long positions. Maybe they're shorting it. They know the exact date that they can come out and say stuff. It's disgusting.
At least Greenspan, when he was asked, he's like, I only own T-bonds or T-bills. He was only in the government bonds, so he was in cash basically.
Yeah. And
so because he didn't want the perception of impropriety, right? Which is I really think that's the Fed's biggest challenge right now, is its perception from the populace. So they keep coming out, everyone wants, that's what leads to confidence, right? Yeah. And without confidence, a lot of capitalism, which I don't think we really have anymore, comes under a lot of pressure, because you take out loans when you're confident that you'll be able to repay loans. And if you lose that confidence, what happens? People rein in their spending, and our economy is based on consumption. So if you don't have the consumption, the only thing that you can do is have the government, take on debt, and then have the Federal Reserve fund that debt. And that's what we're doing. Well, Dan and I were talking, and Dan had mentioned to me that Warren Buffett was in cash, a lot of cash. You have Michael He is right now. That's what
my understanding.
told me.
Yeah. Yeah.
So that's always something interesting to see, is where are the big boys putting their money? Because that's what happens with markets. The money rotates. And the key to making money is be in the place where the money's going. It's like the proverbial hockey puck analogy, right?
Yeah.
Go where the puck's going.
Wayne Gretzky. Mm-hmm. Yeah. No, and what's one of the reasons I focus on volume in charts, because every single time we have a down day like we had on Monday, it's massive volume, where I think a lot of the smart money is slowly exiting. And then we get these huge V rebounds on lesser and lesser volume. So I think what you guys are saying, it's like, you're about to talk about Michael Burry too. But if the likes of like Warren Buffett's are starting to move into cash, we have seen lately that hedge funds have been moving into the market on leverage, and hedge funds are they're actually kind of dumb money. They tend to move in with a lot of leverage at the very end. And they're doing that coupled with the average American who's been taking all the stimulus money and throwing it into the market. Now we're watching stuff move higher and higher and higher on lesser and lesser volume. So I think there's less participation, and it's why I think I'm in the right spot being a little bit short here.
So who's the smart money?
Probably the Buffetts and the Burrys of the world. Like Michael Burry is I think a major, I mean, I don't know what you were going to say about him, but if you've never seen the movie, The Big Short, you should absolutely go and watch it.
Right.
That guy's brilliant. He's one of the very first people to realize there was massive distortions going on in the markets. And if I remember correctly, he even created a market so that he could short housing. And he's calling this the biggest bubble ever by a multiple of 2. So he's saying it's way bigger than where he was betting hundreds of millions of dollars and created a market for himself. And he's saying this is more out of whack by a factor of 2.
He has balls of steel and he has extreme patience.
Yeah. That's one of the things you and I have, I think you're kind of noticing yourself, like patience is a huge part of trading. Everyone wants to like, what's going to happen right now. And, sometimes you just have to take a little step back, plan your trades, and then just be super patient. And that's one of the things I've gotten a lot better at and try to teach people is you have to time your entries and your exits.
Absolutely. Yeah. I have a Post-it note that I've had in front of me for 2 years. Patience.
Yeah.
It's the one thing that I have been trying to improve upon in my entire life.
Yeah.
Is that because it leads into, like, for example, I've been trading the miners for a lot of years, but I did not see June, July, and August coming. I did not see, I mean, normal volatility is normal, but I didn't see 50% drop in these miners. I didn't see it coming at all.
No, I don't think many people did. I didn't see it. Well, I mean, to be fair, my issue with it was as far as patience. If you guys remember, when silver, I basically was putting out videos, screaming, trying to get everybody into silver at like $11.
Yeah.
Thing spikes to 30. I start putting out videos when silver's at like 25, 27, saying, hey, it's time to short silver, like take some profits. I start getting all kinds of crappy comments. I start getting crappy emails. If you're not a silver investor, why would you say short it? And I said when it topped out, I would not be shocked to see silver do a 50% retrace, if you guys remember that, meaning silver is going to go to 20. What I didn't understand or didn't see coming was that it's going to take the bet. It might be 2 years before silver hits $20, if it even hits $20, right? And the environment that we're in, where we're blowing up the balance sheets left and right, to watch from my studies, which is a safety valve, an inflation safety valve, silver, essentially go from 11 to 30, but then just sit in these doldrums as we print it doesn't make any logical sense.
No, and that's what hurts the most amount of people is when you make an investment, you basically are making a thesis in your own brain, a bet, right? Where you think you're going to go, right? And so you make the bet, you get punched in the face, and you're like, wow, I didn't see that one coming. And so then you pull out, and you put your money elsewhere, you get punched in the face there, and then your initial investment starts screaming higher when if you just stayed where you were.
Yeah. So, I mean, that's a huge part of trading, right? I think this is like the most humbling business on the face of the earth. And there's an investor that I really like. I think a lot of people are familiar with him, but anyone that's new doesn't know. Jesse Livermore's he's regarded as one of the better, traders historically anyway. But one of the quotes he has is, he's got a crazy life. It's a great read if you've not ever read one of his books. I believe it's called the Confessions of a Stock Operator. Yeah. But one of the things he would say all the time, he made the most money, not when he was trading. It was just, he would enter the position and just sit and wait and do nothing. And he talks about that as the hardest thing to do. Because even if you're in the trade, do it a little differently, Dave. You buy something, it goes up 200-300%. You're like, oh, I got to sell it. Well, maybe it's Bitcoin and it's getting ready to go up 200,000%,
Well, the key is liquidity.
Mhm.
If you have liquidity, if you're not leveraging yourself, if you're using money that you don't need next week to pay the rent, then you have to go in. This is the way I think about the markets today. If you are really convicted in your beliefs, you've got to be prepared to hold. And you've got to be prepared to ride through if you're wrong on the short run.
Yeah. No, totally.
Yeah.
Go ahead. What were we gonna say? You got anything
No,
to add,
I'm
Dan?
sorry. Yeah. I mean, it's like, I mean, you nailed it. It's like a good fisherman. You know, when you
Oh, yeah.
cast even with the right bait in the right area, of course you would like a bite right away.
I love that analogy, man. I've been trading markets
It's not
forever.
always
I've never heard anyone draw a correlation to fishing. It totally is. Absolutely. You sit there for 6 hours and not catch a single thing, and then
Well,
just keep doing the same thing over and
business,
over, and finally
yeah.
you get a big one. Yeah.
business, customers, getting sales.
Mhm.
I liken it. Trading is similar, right?
Mhm. Yeah.
You know, you got to know what fish you're going after or the equity or whatnot, right? You got to know the area where that particular fish is, and you better have the right bait.
Yeah.
And so, you know, timing's all part of that as well, as you know, right? So
Mhm.
you could be the right area, you know, the right fish, you know, the right bait, but
Just wrong
timing
time.
may be a little off.
Yeah.
Or timing might be right, but sort of in the wrong area. You know those variables, right?
Yeah, and that's actually how I got so interested in technicals, because I would sit there and look at the fundamentals. I'm like, all right, this stock's worth $10. You know, they make millions of dollars. All right, I'm going to buy it, and then it would go down to 6. I'm like, what? Like, but it was just my time frame. My thesis was right. If I'd held on, like Dave was saying, it actually goes to 25, but I didn't know what I was doing. I was down 40%. So then I sold out. So then that's when I started to learn about technicals, and it made it a lot easier for me to understand where the big boys enter. And then I follow them in if I have a thesis that is, you know, or if I just follow my own thesis and watch what smarter money is doing than myself. And what's also interesting about markets, kind of what you're saying, Dan, I found it really interesting over the years. If the three of us decided to like go jump into just a random business, we would do all kinds of due diligence. You know, we would only use money, like Dave's saying, like not scared money, put together a business plan. In the stock market, people just go, oh, I've never done this before. I'm going to compete against professionals who've been doing this for 30 years with billions of dollars. I'm just going to jump in and make thousands of percent. And I'm going to get really angry when that doesn't happen. Like it just doesn't work that way. Right.
Dude, absolutely. Another analogy would be like a sports analogy. You know, it's like, okay, I think I'll jump in the ring today and put the gloves on.
Yeah.
Right?
Yeah.
Yeah. Against, you know,
yeah, Mike Tyson. Like, give me a break. You're not going to win that.
It's like, good luck. You've never trained or thrown a punch, and you think
yes,
you're going to dance with him and pepper him. I don't think so.
No. I mean, you might get in a good shot. You might knock him out, but you know, 99 times out of 100, you're going down in the first round.
It's the same thing in the market with the professionals. Like you say, man, they're professionals. They've been in the ring a long time. They've been at that level, and you nailed it. And Joe Blow thinks he's going to walk in and he's going to just have the moves and snap the punches. I don't think so. Yeah, prepare to get bludgeoned.
Well, with that said,
yes.
With that said, like, for example, I'll use myself as an example of somebody who had no clue what they were doing. But, you know, I'd been focused on my own life for years and years, Greg. I was investing passively until a couple of years ago. And so I had never really traded options until about 2.5 years ago. And when I started reading about trading it, you know, because everybody says, don't trade options, don't trade options. The reality is you should be trading options, because if you do it correctly, it provides a level of a buffer. It provides a level of security that you don't get if you're just trading shares.
Yeah, I mean, I got into options just because, well, I mean, even if I take a step back, when I first started, kind of to Dan's point, I lost tens of thousands of dollars when I first started trading. Actually, when I first started trading, markets were just screaming higher. And I just would randomly pick stocks and they would all go up. And I was like, this is easy. Like, I don't know why everyone's not doing this. Try to get my friends in it. They're like, I'm not doing that. And then everything started tanking in 2008. And that was my introduction. And that's actually when I learned to short, but I lost tens of thousands of dollars in my first couple of years of trading, just everything we talked about, until I got better at technicals. And it's helped immensely. But options, yeah. I mean, it's like I like trading options just because you can put down a smaller dollar amount and literally make returns that would take you years.
We're talking buying. So you prefer to buy and I prefer to sell.
Yeah, and that's totally cool. And it's different. There's all kinds of different things you can do. And I don't try to push my principles on people. I just teach and let people kind of. One of the things with Patreon, people are always like, I need a stock picking service. That's not me. If you want me to tell you exactly what to do all the time, I'm not. That's not. You're not going to get that from me. I want to teach people how to do this on their own, because if I go away, if you're totally relying upon me, what if I get hit by a bus? What happens to your finance? You should learn how to do this on your own.
Oh yeah, and I love hearing the rationale. That's what I really like to hear from people is just because you do something doesn't mean I'm going to copy you.
Yeah.
But I like to hear the decision making on how you arrived at your decision, because that's how I learn, right? Because I have one way of seeing things, which may not always be the right way, right?
Sure. Yeah.
For
We're
example,
all like that.
Yeah. Like one of the things I learned is like just by trading shares, for example, let's say you own shares of like First Majestic right now, the miner. Well, and you bought it 6 months ago. Well, chances are you're getting a haircut right now. So what you can do is you can actually trade, you can sell covered calls and at least make a percentage of that money back in your pocket. And if it spikes up to the price where you want to get paid, you get your money back. But at the very least, you're collecting 2-3% over the course of X amount of time frame. So why wouldn't you do that?
Yeah, I mean, there's all kinds of strategies, right? There's a million different things you can do. Yeah.
Yeah. But
so I'm just saying that options allow you to hedge yourself and protect yourselves that just trading shares doesn't allow you to.
That's why options were originally created, it was mainly for farmers to hedge themselves. Yeah. Go ahead, Dan. What were you going to say?
Yeah. I was going to add just to hit you again with the fishing thing. Yeah, no, you nailed it too. You're teaching people at the end of the day how to fish is what you're doing. Yeah. You're not doing the casting and all the work for them. You know,
I do show people what I'm doing, but I would rather people learn how to do it themselves. And for me, I think my confidence grew drastically once I stopped following other people. So I don't follow other traders. People will always like, hey, what do you think about this guy's saying? Like, we're in totally different spaces. I don't know what that guy's thinking, why he's thinking it. And I don't follow other people. It really just kind of convolutes my thought process, and learning to just have confidence in myself, my own abilities, and really learn. I think the reason I think I really like trading, it's probably the nugget here, is it's self-mastery. I think more so than just about anything else, trading will really show you who you are. And if you have the ability to really control yourself and your emotions, because markets are really just about emotions. And the more robotic you are, that's why so many traders now are just using computer algorithms, because they're incapable of controlling themselves.
Yeah. And that translates to life. You know, you're not flying off the handle. You're not Mr. Road Rage, because you're learning patience. You're learning to be even keeled. You're learning to basically be the leaf on the water, right?
Yeah. Yes.
I've learned that too. Yeah. It's a reflection of who you are. Yep.
Yeah. And Dan and I have talked a lot about that, because I'll be like, Dan, imagine if we were in these trades like 2 years ago, we'd be like at night going,
Yeah. So to that point. So I think a lot of people find trading very stressful because they're playing with scared money, and they know inherently they don't know what they're doing. And they're not looking to improve. They just want to make their bet, like we were talking about earlier, beat Warren Buffett without doing any work, and then are really upset when it doesn't happen. And for me, I don't want to just keep talking about myself, but it's really just
Dogecoin.
Yeah. Well, that's a perfect example, right? The thing's white paper is literally just a picture of a dog, but people come on TV and tell you to buy this worthless thing, and then they start buying it. But that's markets like that. If people give or believe something has value, then it will go up.
And it worked. If you were early, and that's the thing with a lot of these things, if you're early, just get out of the way of the train, because if you're early, you're probably going to make money.
It's
Oh, yeah.
amazing. Yeah, absolutely no use case that I know of, by and large. I mean, what's the use case for Dogecoin? That's how you have
The
to
use
think.
case for it now, which it's
Yeah.
become, is
Yeah.
people don't want to sell their Bitcoin and their Ethereum. They want to hold on to it. So they're willing to spend worthless Dogecoin. So it's become a form of currency because it has almost no value. But that's the same thing as fiat.
Interesting.
Wow.
Yeah.
Well, the other thing that I think has a lot of value with Greg's Patreon service is I am not a chart expert, and like Greg says, this is a journey, right? And so you want to try to pick up nuggets. If it's like if you were inundated with a download, you wouldn't remember any of it. So over time, for example, like if we just talk about like a cup and handle, right? You've talked a lot about cup and handles over the last year. So I think it's good to review, okay, a cup and handle, where does it fail? Or, how to identify, how to even identify a cup and handle? Is that something that you can review for people in a couple minutes?
I mean, yeah, it'd probably be easier in a different video using some actual charts and stuff. But what I'll say to that is, and this is my own wording, I believe technical analysis is simply looking at psychology in bar form. So one of the things I try to do, because it's a little hard to do without charts, if someone has no idea what a cup and handle is, I will talk people through the psychology of that chart pattern. It's not, oh, there's a chart pattern. I'm just going to go buy it and have no idea why I'm doing it. I tell you, I will teach people the psychology behind it. That should help you be more confident. And then I show people appropriate buy and sell zones in those patterns to make yourself more robotic, to increase the probability you have more profitable trades.
Right. And with a cup and handle, typically what happens is it revisits a previous pivot or high. And then what happens is, and correct me if I'm wrong, but the way I understand it is at that point, a lot of people are like, great, I got my money back, I'm getting out, and it tends to drop. So I mean, it's hard to do without a visual, but you got people selling, thing comes all the way back up, but you'll have people that might be sitting in here for years. So like if you're looking at precious metals like gold, silver, they have a decade-long cup and handle. So the people that sold originally when gold hit close to 2000, it came all the way back. People started to sell because they've been holding on to it for 10 years. And they go, finally, I get out at the appropriate time. I get my money back. Even though they've lost 10 years, it will handle. And that handle is the weak hand selling right before it's about to break out. And then it will break out. And that's how you go and find your buy zones, etc. And right.
psychology in all chart patterns.
Right. And that's why you typically say the buy point is above the cup.
Yeah, to break out. Yeah, and that's from a Jesse Livermore thing. Yeah, he kind of made that popular. You buy new highs and you sell new lows. So if we go back to the SPY, Monday there was technical damage done, and I'm from the psychology of that. I think this is the first time the buy the dippers might get a little bit trapped, and it was incredible the speed at how quickly Monday came down, and all they were talking about risk off. I'm not even sure we're even in a risk off zone yet, but that is a little warm up for what could possibly come. And it's why I think central banks around the globe are paranoid, and 1-2% moves is instantly they've got to go prop markets back up because they're worried about a huge drawdown.
You got him hurt back. Yeah. Now he's worried. You said it. You heard it. You see? He's not a machine. He's a man.
Nie prawda.
No pain.
Oh yeah, no. People will buy the dip until it proves not to work. Absolutely.
Yeah, if we go up to new, so I'm shorting right now. If the the S&P 500 to go up and make a new high, you could absolutely go and buy that. And I probably will, because I think if we go up to new highs, we're going to see like a euphoric blast off, a top put in, which could last months. It could, you know what I mean? The Dow could go to 50, 60,000 or something like that in the next 6 months.
Well, the money has to go somewhere. The money has to go somewhere. And where's it going right now?
Yeah.
Because the markets aren't going to new highs. Bitcoin's not going to new highs. Where's all the money going right now?
Yeah, good question.
Well, I think we alluded to it a little earlier. I mean, maybe some of it's going to, if it's not rotating, to your point, Dave, per se, maybe it's going to the sidelines, cash. You know,
Yeah.
I know the Buffets.
That's why they're doing all the reverse repos, right?
And the Cubans and stuff are saying they got a lot of cash on the sidelines now, right? Because those cats are sitting there the way I see it. Another analogy, Greg, sorry.
No, it's okay.
It's almost like a lion in the weeds, waiting, you know, let the gazelle come to him, right?
Yeah.
The gazelle strolls by and the lion's in
Patient.
position at this point. Easy kill. I don't have to run out in the sun, run around, waste energy, right?
Yeah. No, yeah. If you
That's
if
what
you
these
think of
cats do,
if
man.
you think of
That's
yourself,
what they do.
yeah, if you think of yourself as an apex predator, like a lion or something, it's exactly what they do. They
That's
sit
what
there in
they
the
do.
weeds and they're waiting to pick off the weak zebra or whatever. And that's all
Yeah.
I'm trying to do. And to your point, it's like, where's the money going? So I've been pointing this out for a while, and this is where patience comes into play. And in all honesty, like running a service makes it a little bit more difficult, what I'm about to say. So if you were to look at a chart of the dollar, it actually looks fairly strong. Now they compare the dollar to other fiat, but that would make sense if I'm sitting here saying I'm watching volume increase on sell days, and then there's no volume as it's coming in with buying, and then things aren't making a new high. Where is it going? So we were talking about Burry and Warren Buffett at the start, moving to cash. The dollar looks like it's getting stronger. And I have been talking about the dollar being in a positive chart pattern, and I've given price targets for it. It's just taking a little bit longer than I thought, but it's also not going down in an environment where we just print money. So again, like, I think that that's probably what's happening. The smart money is slowly exiting. They do it slowly so that they don't cause massive price collapses like they do in gold, right?
Yep.
Like that's what we see happen in gold, where you're like, oh, it's down another $100 or something because some Joe Schmo guy came in and dropped billions of dollars in seconds. You only do that to hammer the price down. So they don't want to damage the stock market, so they exit slowly over time. But Monday is what happens when you see a bunch of people go, oh crap, and then you get a huge down move. Like if we actually have risk off, like let's say the Fed actually raises interest rates to 1 or 2%. I mean, I can see the Dow down 2,000 points in a day. Easy.
Mm-hmm. Agreed. Yep. No, I think you're right. They have to leverage it down slowly over time. Otherwise, it's like a roller coaster shot straight down at that point. Yeah.
But then, I mean, but this is what's the problem with the environment. It's like, where do you go? If you're like, well, I'll pull my money out of the stock and put into housing, that's at all-time record highs. You want to buy used cars? That's at all-time record highs. You want to buy computers? That's at all-time record high. I mean, what do you do? This is incredible. This is what happens when you have intervention. They distort free markets.
Agreed.
Yeah, you'd like to say the dollar liquidity, but then the problem is if you are losing X% a month from higher prices, then that kind of backfires.
Yeah.